Welcome to Unit 5, second part, Audit of Limited Companies and Others. In this second part, I'm going to cover liabilities of an auditor, audit of educational institutions, audit of insurance company, audit of cooperative society. Come to liabilities of an auditor. Liabilities of an auditor can be classified under the following two heads, that is civil liabilities and criminal liabilities. First, consider civil liabilities. Here, civil liabilities, that is liability for negligence. The liability of an auditor arises where it is proved that his client has suffered a loss due to his professional negligence. The auditor may be held personally liable if it is proved that he had exercised reasonable care and skill. He must have discovered the discrepancy. In a case, it was held that if an auditor fails to show as much skill and diligence as is expected of a man of ordinary prudence, he must suffer the consequences. Come to the second one, that is under civil liability, liability for misfeasance. According to section 340, the court may assess damages against delinquent director and other officers of the company, including an auditor for misfeasance or breach of trust. In case of an auditor who also comes within the definition of officer in section 2 subsection 59, for purpose of this section, if he is guilty of neglect of duty or misfeasance so as to cause loss of company in any way, proceedings may be taken under this section against him either independently or other officers or jointly with them. This section provides a simple way to the company to cover damages where an auditor or any other officer of the company is guilty of misfeasance. The time limit for bringing an action is 5 years. Come to criminal liability. First one, misstatement in prospectus under section 34, where an auditor makes false statement with material particulars in returns, reports, prospectus, or other statements knowingly it to be false or omits any material facts knowing them to be false. He shall be punishable with imprisonment for a minimum term of 6 months extendable to 10 years. Come to this second one under criminal liabilities, that is non-compliance by auditor under section 143 and 145. If the auditors does not comply with section 143 and 145 regarding making his report or signing or authentication of any document and makes willful neglect on his part, he shall be punishable with imprisonment up to 1 year and with fine not less than 20,000 extendable to 5 lakhs. In case an auditor knowingly or willfully with the intention to deceive the company or shareholders or creditors or tax authorities, he shall be punishable with imprisonment up to 1 year and fine not less than 1 lakh, extendable up to 25 lakhs. Under criminal liabilities, proceed to the next. Failure to assist in the investigation under section 217 subsection 6, where the central government appoints an inspector to investigate the affairs of the company. It is the duty of the auditor to preserve and produce to the inspector all books and papers relating to the company. If an auditor fails to assist the inspector in investigation, he shall be punishable with imprisonment up to 1 year and with fine not less than 25,000, extendable to 1 lakh. Proceed to the next criminal liability. Penalty for falsification of books, section 336. Any officer, including auditor of a company which is being wound up with an intention to defraud or deceive any person, destroys, mutilates, alters, falsifies any books, papers, or securities, he shall be punishable with imprisonment for a term not less than 3 years, extendable to 5 years, and with fine not less than 1 lakh, extendable to 3 lakhs. Proceed to next, criminal liability. Penalty for a deliberate act of commission or omission, section 448. If any officer, including auditor of the company, deliberately make a statement in any report, return, certificate, balance sheet, prospectus, etc., which falls or which contains omission of material facts, he shall be punishable with imprisonment for a term not less than 6 months, extendable to 10 years, and fine not less than amount involved in fraud, extendable to 3 times of such amount. Proceed to audit of educational institutions. Audit of books of educational institutions, schools, colleges, universities, etc., or other such institutions which are engaged in the educational field is known as audit of educational institutions. Auditor should check income and expenditure account and balance sheet of such institutes in order to verify and report the true and fairness of results presented by income statements and financial position presented by the balance sheet. An auditor of educational institution should perform the following tasks one by one. Let us consider. First one, the auditor should go through the University Act, trust deeds, and should note the rules and regulations relating to accounts. The governing body may pass resolutions from time to time in respect to accounts. A copy of minutes books should be made available to him so that he may be able to confirm whether the decision of the government body have been complied with. Next, auditor should obtain a copy of budget or financial statements to study of different heads of income and expenditure. Proceed to the next. Auditor should thoroughly assess the strength of internal check. Next, auditor should watch the granting aid from the government carefully. Auditor should verify the receipts of monthly fees from students with the counterfoils or carbon copy of the receipts. He should also see whether cash received has been banked daily or not. Proceed to next. Other charges from the students such as examination fees, laboratory fees, fines, etc. should be carefully verified. Next, any fees received in advance should be properly adjusted. Next, the concession of fees and other charges should be duly authorized by the proper authority. Any charges becoming irrecoverable should be written off only after proper authority has recommended. Next, any granting aid or funds received for a particular purpose must be utilized for the same. Next, the donations and other subscriptions from the various authorities have been accounted for and acknowledged. Next, the income from property, investment, etc. should be properly verified from the vouchers. Next, auditors should vouch the amount of salaries paid with the salary register. Any increment given to an employee shall be duly sanctioned. Next, the staff provident fund should be verified and it should be seen that is invested as per the rules. Next, the establishment expenses must be carefully watched and it should be seen that capital expenditure has not been treated as revenue expenditure or vice versa. Next, the payment of scholarship should be verified with the receipt from students and scholarship register. Next, all the assets and liabilities should be properly exhibited in the balance sheet. Next, the stock of equipment, stationery, furniture should be carefully verified. Come to the last. While making payment of staff salaries, income tax should be deducted at source and shall be duly deposited with the income tax department. Let us proceed to the next audit of insurance company. Following steps should be taken by the auditor while auditing the accounts of insurance company. Consider one by one. First one, internal check system. Auditor should examine the details of the internal check system. Second one, verify the premium amount. Auditor should watch the premium received with the insurance company policy register. He should check the total outstanding premium from the books also. Next, inspect the claim register. Auditor should compare the amount of claim with the claim register. He should also check the policies cancelled with the documentary evidences. Proceed to the next. Auditor should check the cash balances. It is relating to the loans of the company. He should also verify the interest earned. Proceed to next. Examine the final accounts. Auditor should examine that the final accounts of the insurance company have been prepared according to the Insurance Act or not. Proceed to the next. Verify the payable commission. Auditor should watch the commission payable to agents. He should verify that this commission does not exceed the rates prescribed in the Insurance Act. Next, examine the investment. Auditor should examine all the investment made by the insurance company. Valuation of investment should also be checked. Next point, Insurance Act 1938 application. Auditor should also examine that all that prescribed legal requirements have been complied by the insurance company. Proceed to the next point, checking of bonus. Auditor should watch the bonus paid in the bonus register and agency register on closing balance. Proceed to the next point, provision of depreciation. Auditor should also verify that sufficient depreciation is provided. Proceed to the next point, examine insurance policies. Auditor should inspect the accounts reinsured. He should also note the amount of reserves relating to the company loan. Next, come to the point, accrued interest checking. Auditor should verify the receipts, interest, dividend, and rent. Proceed to the next point, allocation of surplus. Auditor should see that surplus is proper allocated to the shareholders, policy holders. Next, expenses allocation. Auditor should examine that the management expenses are allocated correctly between the various accounts. Next point, deposits in state bank. Auditor should also verify that the required amount is deposited in the state bank or not. Come to the next point, balances of agency. Auditor should verify the balances of agency and branch to see that they are all recoverable. Come to the last point here, loans against policy. Auditor should verify those loans advanced to the policyholders against their policies. He should check the receipts and see that they are within the surrender value policy. Come to the last one, audit of cooperative society, that is under section 17 of the Cooperative Societies Act 1912. Special order of every registered society at least once a year. Accounts are to be audited by a chartered accountant under section 44AB. In addition to the audit that is carried out by the administrative department, Directorate of Cooperative Audit, as provided in the state cooperative laws. Cooperative society under section 44A is required to maintain its books of accounts and any other relevant documents as per the provisions of the Income Tax Act. Cooperative society shall get its accounts audited annually by an auditor selected from the panel prepared by the registrar in the prescribed manner within the period of 60 days from the close of cooperative year. Next, cooperative society shall have free access to the books, accounts, papers, vouchers, stock and other property of such cooperative society and shall be allowed to verify its cash balance and securities. Cooperative society shall furnish to the person auditing the accounts of a cooperative society all such information as to its transactions and working as such person may require. Proceed to the next points. Cooperative society, to ensure that its accounts are audited annually and the audit report presented for consideration in annual general body meeting of the cooperative society as provided in section 31, and a copy of the audit report shall also be forwarded by the cooperative society to the registrar for his information and record. Come to the last. Cooperative society conducted in time, the registrar shall get the audit conducted and fees paid shall be a charge against the delinquent officers of the committee and shall be. Let us wind up this chapter. Okay, thank you very much.